Good morning, traders from each and every part of the world that you're joining this series of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets to access various financial assets. And before we proceed, like to bring it to your attention that this is going to be a pre-recorded YouTube video to mean that you could access this YouTube video at your own free time by going to YouTube and searching HFM Kenya. Once you get there, kindly like, subscribe, click on the notification button and share so that this content could reach more and more people that could benefit from our efforts here at HFM of bridging the educational gap. I'll give a 2-second moment of silence, then we proceed with little or absolutely no hesitation. Very nice. So there is no lack of volatility in this market, evidently. We have various financial assets giving us clear market direction, which is what we like to see as traders and investors. But before we dive right into it, we begin with our standard procedure by beginning talking about the fundamental analysis. And we have defined fundamental analysis as economic and geopolitical forces which moves the financial markets. And in this regard, having in mind there are various economic and geopolitical forces moving the financial markets, and by moving I mean appreciating in value of an asset or depreciating in value of an asset, would want to concentrate much more on the United States. So because the United States is a dominant world power which controls up to 24% of the global wealth or the GDP of the world, and so any adjustment they make in their economy, any adjustment they make beyond their border affect us directly or otherwise indirectly. All right, so we have been having soft US dollar numbers coming in. We have had for this month, that is for the previous month, which is printed this month, we have had soft NFP, we have had soft CPI. So we see both the labor and the inflation indicators of the United States is coming in soft, to mean below expectation, telling us a struggling economy or somewhat. Then later on the 19th of let me print it, on the 19th of March, we had Jerome Powell, who is the chairman of the Federal Open Markets Committee, issue out interest as decision of the Federal Open Market Committee, which is the central bank of the United States. Now remember, the central bank of the United States has many roles like any other central bank in the world, but two major roles which we as investors and traders are keen on for us to tell possible market direction. And these two key roles is, one, control inflation, and number two, ensure favorable employment. Now, they do this through monetary policy, which is controlling the supply and demand of money, and they are only able to control the supply and demand of money in the economy using interest rates. Yeah? And interest rates is defined as the cost of borrowing money. All right? Now, interest rate, they can either cut, hold, or hike. When they choose to hold, like we see here, the actual one was at 4.5%. The consensus or the anticipated one was at 4.5%, and the previous was 4.5%, and the one which actually came out at 4.5%. So here we see the Federal Open Market Committee hold interest at 4.5% as expected and as previous. What does this tell us? That the Federal Open Market Committee, led by the chairman Jerome Powell, is cognizant of the fact that the US economy is dwindling, but it is optimistic of holding the interest rates, not adjusting the supply and demand of money, in anticipation for better economic growth into the future. Okay, and having this in mind, it is important to note that Jerome Powell's speech, which we could find in reputable international networks, like Bloomberg, CNN, if you may like, majority of the sentiments he brought out were dovish in nature. So they weakened the dollar. He was reflecting the uh, already printed data that we had seen in the earlier weeks. All right. Having that in mind, this gave weakened the dollar slightly that we are going to see. However, walking into the week, into this new week, we had various changes happening. Number one, we had the United States of America issue targeted tariffs on Asian stocks. This had investors flock into United States or America stocks, giving it a bullish sentiment. On top of that, we had the United Arab Emirates issue statements during Trump's visit and officials of the United States in UAE that they are going to invest up to 1.4 trillion US dollars. Now, this money is going to be invested in, of course, tech, technology, oil, infrastructure, and this will have bullish sentiment on the United States dollar, right? So we see much volatility that as we need to in the financial markets, which is giving us optimism as traders to be excited about the financial markets and take opportunities as they present themselves. Now, moving over to the charts to demonstrate this. Nice. Beginning with gold, the precious metal, by far the most traded financial assets. We see that on Friday we had a dip, right? Brought about by the positive sentiments which were aired out after the Donald Trump's visit to the United Arab Emirates, which gave investors confidence in the US dollar. However, we have time without numbers mentioned that for understanding to be on the positive side of the history of the movement of volatility of gold, it is important we focus much on geopolitical forces and keeping in mind economic forces. However, we had what I mean by that. However, when we had this bearish candle printing with a long wick from the bottom, we see that we know that in the middle in Eastern Europe we still have tension going on. Negotiations are going on, but tension is still going on. Now, geopolitical forces will tend to stumble over economic forces when it comes to the movement of commodities with specific interest to gold, silver, and silver. Now, having this in mind, as much as we are having positive sentiments coming from indicating that the United States dollar is increasing in its value, we understand that majority of the time geopolitical forces like war and tension will have gold being in a bullish scenario. So we see a reaction from this area of interest here. Candle printing, Friday's candle printing with a long wick from the bottom, and prices attempting to keep being bullish, which is considered a risk-off approach, a much more less risky approach as compared to those traders who would want to now getting in for bearish. However, there are debates among market analysts that gold is now overbought. We're possibly likely to see a scenario where now gold starts retracing to the downside. This is quite important to note, but being in line with fundamental analysis will have technical analysis quite easy. All right. So having this in mind, being in a bullish setup or long on gold would be considered safe. However, when lows start being taken out drastically, perhaps prior to print below this area of interest I've just drawn, and attempt to reach this area of interest here at 2968.30, that would get us cautious to possibly consider for shorts. But remember what moves the market: fundamental analysis, which is geopolitical forces, is good to be in line with this, because the market is random, but the randomness of the market, and by randomness I mean the nature to move in an uptrend or downtrend, is majorly determined, in fact, dominantly determined by the forces that we have defined as fundamental analysis. Moving on to oil, gets up done with commodities. Oil seemingly is bouncing off from this area of interest, and oil is an interesting asset to trade. And remember, we called out oil here for short when it was up at 80.88 dollars per barrel. This was due to the intervention of the new administration of Donald Trump to lower the prices of oil, so that to lessen the likelihood of the war happening in Eastern Europe, right? Right now we see much of consolidation, whether when price is neither moving up or down aggressively. All right. However, with the new investment coming in the United Arabic Emirates, we are likely to see a much more movement of oil in either direction. We are going to be possibly monitoring this. Oil is quite a delicate asset to be looking at, because understanding that fundamental analysis plays a key role in moving oil. We also have an additional factor, which is toppling up the geopolitical aspect of fundamental analysis, and this is the OPEC countries, the oil producing countries. It's a cartel of oil producing countries that dictate the prices of oil in the global markets. Now, we are going to be watching closely and monitoring this as the days unveil, especially now that we understand that Donald Trump strike a deal with arguably the most affluent oil producing country, which is the United Arabic Emirates. Off to stocks, beginning with US 100, composed of majorly tech companies, 40 to 50 tech companies in the United States. This is indices, some would prefer to call them futures. We see price retracing to the upside, not reaching the area of interest that we alluded it would, and this is because sentiments and fundamental analysis change. Okay, now what has changed the bearish movement of Nasdaq to now appearing to attempt to change its character to being bullish, giving us investors and traders a risk off approach to be bullish based on fundamental analysis? It's because of the targeted tariffs by the United States government on Asian stocks. Now, if you impose tax on Asian commodities, this will have a somewhat bullish sentiment on a competing stock, and which competing stock are these? US 100. Number two, the investment of 1.4 trillion by the United Arabic Emirates after Donald Trump's visit to that state, which is majorly inclined towards technology and infrastructure advancement in the United States as an investment package, is giving investors and traders optimism. Now we see the prices of Nasdaq appearing to be bullish, although I see it opened with a gap. We would be monitoring this as the week unveils, but as it stands now, those are the current sentiments printed out in that particular regard. A likely scenario also we are going to see on S&P 500. I just bring it out. S&P 500 also printing to the being long due to those sentiments. Somewhat also similar scenario on US 30. So we see US indices or group of stocks behaving positively, reacting from these positive sentiments. In German 40, we attempted to take out the high. However, price is retracing. Would be monitoring it as time unveils. This would consider us to be in long positions, so as to take advantage of the long-term bullish trend that has been happening. As a disclaimer, this by any chance is not financial advice. This is purely meant for educational purposes. It is important to do your due diligence and observe risk management so as to ensure longevity in the financial markets. And if this is your first time getting to hear about the financial markets or some of the jargons I've attempted to speak about, kindly get back to your mentor, and your mentor will help you register for an account, which is absolutely for free. Or otherwise, you could visit hfm.com, click on register, fill in your details, and our experts will get in touch with you to help you proceed with that process. I saw Lazarus saying that he's stuck with account creation. Also, you could visit hfm.com, get in touch with our customer service. They will be happy to help. And I'm going to drop you a number as I see you are requesting. So guys, until tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Take care and God bless you all.